Welcome to Commodity Analysis on Monday, the 22nd of April 2013, and our free to view recap and look ahead at the Emini S P. I've gone up and pulled this chart up of the Emini going right back to its inception, and this is the weekly. And I'm just trying to draw your attention to these three tops here. 1, 2, 3. I don't think this is a top. I personally think we'll go higher. If we don't, we're going to have a hard journey down. But I personally want to draw your attention to, and if I can just move over there and just expand this, and let's have a look at these tops, these pivots here. In fact, any pivot, any substantial pivot, you're going to get a bunching together of, let's have a look at this one here. Look at these. And I think it's just our expectation that we're going to see price sail on straight through this area where we've got these two huge areas of resistance. Here we go, 1, 2, and 3. That we should expect to see some very volatile bars here. Perhaps even a few new lows. It looks suspiciously to me like we are going to go through the process of building some sort of pivot here, even if we then move higher, which I suspect we will. And I don't want to go into the ins and outs of the fundamentals behind it and how much of this is QE driven and how much of this move and what's going to happen when the tap's turned off. I'll leave that to others. They're far better than I am. But what I do want to look at is the reaction lines involved in this, and I am assuming that we have a market that is going to break through here. I may be wrong, but in the meantime, we want to trade this. This is tradable. If we drop down to the daily, this is e-signal, there's some big moves here and plenty of money on the table if we're careful. Let's just drop e-signal and go to the FX Pro, and it's the platform we're using because we've got this automatic indicator. You can use it, you can do what you like with it, and you can watch me and see what some of my ideas. Basically, reaction lines are much underestimated, and there's not been enough work on them. There's a lot of work on action reaction lines. Just to remind anyone who's just joined us, the reaction line is specifically the distance in an Andrews pitchfork or any other type of pitchfork from the pivot, which is called PO, to the midpoint of P1, P2, projected forward into the fork and drawn at the same angle as this line here, the baseline, the BC line it's sometimes called. The reaction line reflects all of the energy of this distance, and there is your reaction. Now, Friday we popped through there, and there's no doubt that this line is now behind us, and that was a very, very sharp retracement, taking us back to 1531, the low 1530s, and then a pop-up. Literally, it's as if the door's been flung open and price is screaming up saying, let me out. And here it is, and it does want to go out. That's one of the reasons you've got to trade the Emini S P, because it's a rigged market. People who trade stocks do so from the long side. It's not like FX, and for me, many years ago when I was working as a professional, many of the soft commodity markets just don't have this long bias that equities do. So we're going to leave this behind. Remember these forks. This is the big one at the moment, and we are now back within the actual upper median line parallel on the center line of this fork. There's also ascending. You can see these. I've drawn this fork in, by the way. Let's just waggle it around so you can see where it is. Let's get it. There you go. And those lines here, this line rising up through here and this line rising up through here, are reaction lines from that third fork. And let's just overlay onto them. You may think there's no correlation at all with price, but again, I'll use my favorite phrase of the moment, price distribution. You may see a dip below this line. You may see then support above this line. But this line, and especially the higher time frame reaction lines, have a profound effect on price, even if price has passed through. And if you look at the recent post about gold's drop, it's the same for a median line. There's a median line on there that we've isolated and showed on the website, and it clearly has excellent correlation with price, even though price has dipped through and has, this sort of thing. You have support, price falls, and then price is held. Anyway, we're looking for a dip and we're looking to get in from the long side. Let's move to a slightly more complicated chart because we want to see, is there anything ahead that's going to put a squeeze on price and force it back? We've got to retrace some of this move. I wouldn't want to get in at 1554 where the June contract's currently trading. So where are we? 1554. We've had a nice little move up from the lows, and we really need to see it back. This is a long-term monthly reaction line from a long-term fork, and it's something that has helped us many times. It's not as clear on here as it is in previous history, and I'm not going to go back just to show you this one particular line, but there is a rising set of bands, and if you subscribe, you'll have seen the 20-minute video on this that's pulled price higher. There's a band of about 3 major reaction lines that we can actually identify and see price bounce off over the last over a year, and it's carried us higher, and they're not to be underestimated. Here's another little one, this one here. Again, remember, we can't move these. They're all drawn by automatic indicator, and when price refreshes, it goes back to its position. Now, sometimes I draw over them because if the pivots don't exist, obviously, in a lower time frame, what are we here? We're in the 60-minute. If the pivots for this fork aren't available, the data isn't available back in the 5-minute, it won't be there. So you need to sometimes, and there you are, it's not available in the 1 hour. And I try to keep these charts. You may laugh if I say they're uncluttered and they're not not messy, but I try to keep as few lines on these charts as possible, especially as I trade in lower time frames. I only want the absolute necessity of the lines that are going to the absolute most important lines. We don't want to muck about with a bird's nest, what looks like a bird's nest. Let's have a look at what's happened this morning. Asia was very strong overnight. We've seen this is a downsloping reaction line. This is a major, this is the, if you remember, the black fork we just looked at. It's called big here, as you can see as I hold my cursor over it, big. And look at the correlation with price. Even though price has passed out of this fork and now it's back in it, nice touch. Again, support. You may not think it's support. You may say there's absolutely no correlation there at all, I can see. I promise you, we go back into this fork. Let's have a look at, see, this area here acts as resistance. Then we're through. Tiny pop up, feeling its support. This is the very nature of price. That was a long entry, if you remember, subscribers who probably aren't watching this, but anyway, and there was another long entry. Was it? There it is. That's the big one a couple of weeks ago. On Friday, I think it was, a fortnight ago. Anyway, let's get on with, scroll back to where we are now. Any of these lines, price can retrace to today. We'll have to see, we'll have to wait. Let's have one more chart. There we are, we've got a third median line here, number 8. Now these are just simply coded for me and for the guys who are part of the group. These are coded in terms of importance. So the higher the number, the higher the time frame. And it's a simple correlation with price. The higher the time frame, the more important these are. There's a nice reaction line from an FNL fork, which is our own proprietary type of fork. There we go. Works a treat. Beautiful. Always shows you the first point of resistance. FNL, first and last. That's what it stands for. And it's simply what I observed over quite a few years about using which pivots to draw your fork from. And again, that's taught, we cover that in the course. Let's have a look here. We'll draw a mini fork. We're in the 5-minute. There we are. Lovely touch on the center line. Now, what we want to know is price going lower? Are we going to be able to pick up? There's another. Let's just remove that because that serves very little purpose at the moment, because we're certainly not going to dip our toes in to the Emini S P before the opening at 1554, are we? Now, there we are. Look, we're missing something. I want to show you this. Let's scroll forward. 8, number reaction line. That's from that fork there, number 8. And we need to see if there's any correlation with this. So what we'll do is we'll draw a ray and superimpose that over because it wasn't visible. And remember, angles change as we obviously move from one time frame to another. The angle will change, so we need to watch that later on. And there it is, and that is the other location, I suspect, of it. Yeah. So again, you'll understand what I talk about. That you will see is visible in the 5-minute chart in that location, superimposed, and yet when we go to this location in the 15-minute, it's here. Now if you want to learn about that, and that is, I think, one of the greatest to unlock the real potential of these lines, is to know where they are, because they do move in different time frames. That's just an anomaly of these data platforms. The market has no understanding of these bars. They're made by us. They're of our own invention. The market doesn't understand, and that is why there are various correlations and various anomalies that you need to understand about what you're viewing. Now that's a perfectly valid fork. That is a perfectly valid fork. You can see again we're using this pivot and not this pivot because of the angle. If we use this, all we're doing by drawing a fork, this is all I believe, is expressing the correlation between these, the actual frequency of price that is expressed by these three pivots. Well, now I'm going to express these three pivots, and you can see follows the same line as this F&L fork, this reaction line here, and it seems to have found support on this median line here that we were just talking about again. Now there's a few gaps from my broker feed. I expect to see a retracement back to the low 50s, and then a move higher, possibly a sharp move higher this week. So we're going to watch it there. I wanted to show you this one just before we sign off. This is where we're heading. This is this fork here. I'm going to waggle it for you. This is where we're heading, this target here. If we fail, if we can't break through this median line here, which is, I believe, it's an 887, we haven't even designated that. So if we can't, it seems to be offering some resistance. If we can't break through this line here, the chances are we could retrace. We may find support on this line and then move higher. Finally, we may get a pattern that owes itself to the reaction lines or the median lines, a triangle, a wedge. All of these patterns take on completely new meanings when you start to use these lines. Anyway, we'll be back after the opening. Thanks very much.